Something very strange is happening on Britain's high streets, and almost nobody is talking about it. Walk down any busy road in London, Manchester, or Birmingham today, and you will notice empty shops where letting agents once stood. The signs have come down. The windows are dark. The desks inside are cleared. In the last 18 months alone, more than 2,000 letting agencies across the United Kingdom have permanently closed their doors. These were not struggling businesses that had been failing for years. Many of them were profitable just 3 years ago. Some had been running for decades, trusted by generations of landlords and tenants. They did not merge with bigger companies. They did not rebrand under new ownership. They simply ceased to exist. One day the doors were open. The next day, there was a handwritten note in the window apologizing for any inconvenience. For thousands of landlords, this meant scrambling to find new management. For tenants, it meant confusion, missed repairs, and sometimes losing deposits to companies that no longer existed. And yet, this mass closure has received almost no mainstream attention. The media has been silent. Politicians have not addressed it. Most people have no idea it is even happening. Here at UK Property Point, we believe you deserve to understand exactly what is happening to Britain's rental market and why the people who once managed your homes are disappearing faster than anyone predicted. This is not just a business story about companies failing. This is a housing crisis unfolding in slow motion, and it will affect every renter, every landlord, and every family looking for a place to live in this country. What you are about to learn will change how you think about renting in Britain. It will explain why your letting agent might be struggling. It will show you why rents are climbing even as the companies that manage rentals are collapsing. And it will reveal a broken system that nobody seems willing to fix. If you care about housing in this country, you need to understand this story from beginning to end. The first thing you need to know is that this collapse makes no logical sense on the surface. Think about it carefully. Rents across the United Kingdom have never been higher. In London, the average monthly rent for a one-bedroom flat has climbed above £2,000 for the first time in history. Across the rest of England, rents have increased by double digits year after year. Demand for rental properties is at record levels. There are more people searching for homes than there are homes available. Competition for tenancies is fierce. Viewing queues stretch around corners. Prospective tenants are offering to pay months of rent in advance just to secure a property. In this environment, letting agencies should be thriving. They should be overwhelmed with work, swimming in management fees, expanding their teams, and opening new branches. Instead, they are closing at a rate not seen since the financial crisis. One of the largest online letting platforms in the country recently admitted that more than 30% of its landlord clients had left the market in just 2 years. Independent agencies in London now operate on profit margins below 4%. To put that in perspective, a supermarket makes more profit per pound of revenue than a typical letting agent. At that level, one bad month, one unexpected expense, or one client leaving can push a business into insolvency. To understand why this is happening, you have to go back to a decision made in 2019 that changed the economics of letting almost overnight. Before that year, letting agents earned money from both sides of the transaction. Landlords paid management fees. Tenants paid administrative charges. These tenant fees were not small. Referencing fees, check-in costs, renewal charges, and administration costs added hundreds of pounds to every tenancy. For agencies, this income was essential. It covered the staff time needed to process applications, conduct viewings, prepare contracts, and handle the endless paperwork that renting requires. Then the Tenant Fees Act came into force. Politicians decided that charging tenants these fees was unfair. They argued that renters were already paying enough and should not be burdened with additional costs just to secure a home. The new law banned almost all tenant fees except for rent, deposits, and a few narrow exceptions. For tenants, this was welcome relief. For agents, it was a financial earthquake. Overnight, income streams that had supported their businesses for decades simply vanished. The assumption from government was that agents would absorb these losses. The assumption from landlords was that management fees would fall. The assumption from agents was that landlords would agree to pay higher percentages to make up the difference. None of these assumptions proved correct. What actually happened was a race to the bottom. Agents competed on price to retain landlords who were themselves under financial pressure. Instead of increasing their fees, agencies slashed them. Instead of absorbing the cost, they cut corners. Staff numbers fell. Training budgets disappeared. Customer service declined. Errors increased. The businesses that survived became leaner and more fragile, operating with no margin for error in an increasingly complex regulatory environment. And that regulatory environment became far more demanding at exactly the same time income was falling. Today, running a compliant letting agency in the United Kingdom requires expertise that would have been unimaginable 20 years ago. Agents must navigate right-to-rent checks that require them to verify the immigration status of every tenant. They must understand deposit protection rules that carry significant penalties for even minor breaches. They must comply with energy performance certificate requirements that are changing rapidly. They must follow anti-money laundering regulations designed for banks and financial institutions. They must track licensing schemes that vary from borough to borough, each with different rules, different fees, and different enforcement approaches. One mistake in any of these areas can result in fines of thousands of pounds. For large corporate agencies with dedicated compliance teams, this burden is manageable. For a small family-run agency trying to manage 100 properties across 3 London boroughs, it is overwhelming. The situation became critical when interest rates began to rise. For years, landlords had enjoyed borrowing costs so low that almost any rental yield looked attractive. A property that barely covered its mortgage was still building equity. Capital gains were virtually guaranteed. Being a landlord felt safe, profitable, and straightforward. When the Bank of England started raising rates to combat inflation, everything changed. Buy-to-let mortgage rates that had sat around 2% suddenly climbed above 6%. For a landlord with a £500,000 mortgage, this meant monthly payments nearly doubling. At the same time, tax relief on mortgage interest remained capped at the basic rate, meaning higher-rate taxpayers could no longer offset their full borrowing costs against rental income. Maintenance bills rose with inflation. Insurance premiums climbed. Regulatory compliance became more expensive. For thousands of landlords across Britain, the sum simply stopped working. Properties that had generated profit for years began losing money every month. Landlords faced a simple choice: continue subsidizing their properties out of their own pockets, hoping for a future that might never arrive, or sell while prices remained high and lock in the gains they had accumulated over years. Tens of thousands chose to sell. They did not sell one property at a time over many years. They sold entire portfolios in months. Long-term landlords who had worked with the same letting agent for a decade suddenly disappeared from the market. For letting agencies, this landlord exodus was catastrophic. Unlike estate agents who earn large commissions on individual sales, letting agents depend on steady management fees across many properties. Their business model requires a stable base of landlords paying monthly percentages for ongoing services. When that base collapses by 20 or 30 or 40% in a single year, there is no way to replace the lost income quickly. New landlords are not entering the market to take the place of those leaving. The barriers are too high. The regulatory burden is too heavy. The financial returns are too uncertain. The political environment is too hostile. Young investors who might once have bought their first rental property are choosing other investments instead. The landlords who remain are either professional operators who manage their own properties efficiently or large corporations who employ internal teams and have no need for local agents. Both groups bypass the traditional high street letting agency entirely. What happens when properties are sold depends entirely on who buys them. When a rental property is purchased by someone who plans to live in it, that home is permanently removed from the rental market. It stops generating work for letting agents. It stops housing tenants. It becomes owner-occupied, which is fine for the buyer but represents a net loss for the rental system. When properties are purchased by large institutional investors, they are absorbed into corporate portfolios, managed by in-house teams using standardized processes. These build-to-rent operators do not need local agents. They have their own maintenance staff, their own customer service departments, their own compliance officers. Every block they acquire removes dozens or hundreds of potential clients from the traditional letting sector. Either outcome leaves independent letting agencies with fewer properties to manage, less income to earn, and less reason to stay in business. London has been hit hardest by this collapse because it combines every negative factor into one concentrated environment. Operating costs in the capital are higher than anywhere else in Britain. Office rent alone can exceed what an entire regional agency pays for all its expenses. Staff must be paid salaries competitive with banking, technology, and professional services industries. Insurance, professional indemnity cover, and compliance costs are elevated because exposure and risk are higher. When revenue falls, London agencies have nowhere to cut that does not damage their ability to operate. The regulatory environment in London is also more fragmented and more aggressively enforced. Different boroughs have different licensing schemes, different enforcement priorities, and different expectations. An agency working across multiple areas must track dozens of overlapping requirements simultaneously. Mistakes are punished quickly and publicly. Landlords in London have also exited faster and in greater numbers. Higher property values mean larger capital gains to realize. Higher mortgage balances mean sharper payment shocks when rates rise. More aggressive local regulation means more compliance fatigue. When London landlords sell, they often sell to owner-occupiers or corporate investors, both of which cut letting agencies out completely. The consequences of this collapse are only beginning to emerge. Entire neighborhoods have lost their letting agencies. High streets that once had multiple competing firms now have none. Tenants in some areas struggle to find local professional support. The remaining agencies gain disproportionate influence. Competition weakens. Fees may quietly rise. Service standards may slip. Problems that were once absorbed by many small businesses are now concentrated in a handful of large operators. The connective tissue between landlords, tenants, and properties is disappearing. The market continues to function, but in a more brittle, more impersonal, and more centralized form. New agencies are not opening to replace those that close. The barriers are too high. The risks are too visible. The margins are too thin. Once the local agent disappears, the expertise, relationships, and knowledge leave with them. Recovery becomes unlikely. This is the reality of Britain's rental market in 2024 and beyond. Record rents, vanishing landlords, collapsing agencies. A system designed for a different era, struggling to survive in a world that no longer supports it. If you found this information valuable, staying subscribed to this channel means you will never miss the updates that matter most to your housing decisions. The situation is changing rapidly, and understanding what comes next could make all the difference for your family, your finances, and your future.